What if I told you there's a Bitcoin strategy brewing behind the scenes? One that could shift global financial power and redefine the US economy. While mainstream analysts are focused on inflation, debt ceilings, and monetary tightening, Jeff Booth sees the bigger picture, and it's something almost no one is talking about. Could Donald Trump's administration be quietly eyeing a Bitcoin reserve strategy? And if so, what would that mean for the US debt crisis, global dominance, and other nation-states already stacking BTC? Before we break it all down, welcome to Lights On Invest, your go-to source for crypto, stocks, and investment insights. If you love financial content, hit that subscribe button, tap the like button, and drop a comment below. Your support helps us continue bringing you high-quality analysis every single day. Now let's get to it. Jeff Booth, general partner at Ego Death Capital and author of The Price of Tomorrow, has been sounding the alarm for years. The free market is naturally deflationary. So why do we keep accepting inflation as normal? The truth is, the global economy is on an unsustainable path, with US debt now soaring past $36 trillion. But what if Bitcoin is the answer? We've already seen it in El Salvador, where adopting a Bitcoin standard has transformed the country from instability and violence to a booming, secure economy. Jeff Booth's analysis suggests that Bitcoin isn't just an asset, it's a necessity for the survival of financial systems drowning in debt. And if Trump is strategizing around BTC, it could mean a massive shift in global power dynamics. So, is inflation really unavoidable, or have we all been trapped in a system designed to fail? Let's hear Jeff Booth break it all down, but before we dive in, smash that like button, share this video, and don't forget to subscribe for the best crypto insights. Your support keeps us going, and we appreciate every one of you. Now, let's get into it.
Think about what's happened in El Salvador. I was there when they just launched this, and I went after a bunch of murders and everything else, and what El Salvador looked like. And I saw the hope and the dreams, and I went back, and I saw how far it's changed in a period of four years. Why would it change? Free markets are more productive. Why are they more productive? Because we have more ideas. It's our ideas that create that productivity. So when you have free markets of ideas and more productivity, those become, you don't have to enforce, you don't have to collude, you don't have to tell people that this is the only way, those people are bad, you don't have to centralize. So free markets are more productive. Yeah. And that more productive, people move to them because they're more free. And so El Salvador is early in that, but compared to where they were before, it's like light years. And you can see a whole bunch of other countries going the other way, right? And so each person will have a choice as well, which country is treating them well, and what does that look like? But free markets are more productive, and so that means that people who embrace Bitcoin are going to have more free markets and are going to be more productive, and their citizens are going to be wealthier as a fact.
We're curious as to why this is happening now. There's been a lot of news about the Bitcoin Strategic Reserve. This does bring us to the next question. I mean, crypto czar David Sachs flouted the idea the other day on CNBC, talking about the possibility of this. I want to talk about what a game changer that might be. I mean, looking at the assets, we go back, we know that Norway has about $500 million in assets in MicroStrategy. So indirectly touching Bitcoin. But if they start to, touch it and break it away here, what are your thoughts?
Yeah, and this gets more complicated for a lot of people because they're measuring Bitcoin from a system that's debasing. So if you measure Bitcoin, if you think Bitcoin is a decentralized, secure protocol bounded by energy, and the natural state of the free market is deflation, then the protocol bounded by energy that you couldn't change would price the free market. So all prices relative to that would fall forever. And the only caveat to what I just said is if Bitcoin became not decentralized or secure. So as long as it stayed decentralized and secure, prices would fall forever. But that is massive, important considerations, because what that means is we've never lived in a global free market because we consider inflation normal. But productivity is deflationary. Free market is deflation because we use things that give us more value. But we've never lived in a system that would allow that productivity to flow to us, and a credit-based system can't allow that deflation. So the credit-based system has to get concentrated more and more. It has to keep on printing money. And most people are measuring the world by the manipulated money, that things are getting worse and worse. But if you're measuring Bitcoin, your life is getting better because all productivity is flowing to you in that. In fact, Bitcoin is perhaps the best AI investment because it forces the productivity from AI to you. All of the things people are talking about are measuring a system problem from the system. And so all of the assets inside this, so every asset is contingent on that debt being solvent. Not just the 36 trillion, the personal debt, all of the global debt being solvent. And it's insolvent. It cannot allow the free market to work because it has to manipulate money more and more. So all of these things, you can expect inflation to get a lot higher because the only way to reset that debt is through massive inflation. In other words, debasement of currency. And you can expect that a whole bunch of people fighting in that and their assets within that are trying to trade assets. If you said 11%, the IRR of Bitcoin is 45% a year. If you take the top, if you bought at the top of any cycle and held it for 4 years, your lowest IRR is 23%. What does that mean if you're making 11%? It means you're losing that money to Bitcoin. So you can just, every single person starting to realize that this is imposing a new discipline on the world, whether they care about it or not. It would make sense that people will move their time to the highest kind of risk-free asset, because if you hold in self-custody, it's completely risk-free. It has no counterparty risks to the other system. It's an energy-backed system. And so they're moving their time, and it would obviously make sense that governments will move their energy to it as well.
Is it more of a game theory plan? I mean, do you think that there's already countries front-running this that are buying up Bitcoin in their sovereign funds right now, but just not talking about it?
Bitcoin isn't just for retail investors anymore. Governments are diving in, stacking Bitcoin like never before. El Salvador made history, but they're not alone. By January 2025, their Bitcoin holdings hit 6,043 BTC, worth around $611 million, all in a bid to drive financial inclusion and attract global investors. Russia, once hesitant, is now turning to Bitcoin to bypass sanctions and escape the dollar's grip. Late 2024 saw the Kremlin actively scooping up BTC for trade and economic resilience. Italy's biggest bank, Intesa Sanpaolo, made a €1 million Bitcoin buy in January 2025, an early sign of banking giants warming up to BTC. Bhutan is quietly mining Bitcoin using its hydroelectric power, building reserves without making waves, yet their strategy could redefine national wealth accumulation. And in the Middle East, more nations are joining the Bitcoin standard, stacking BTC behind the scenes. This isn't just adoption. This is a monetary revolution. Bitcoin is going sovereign. But what's next? Jeff Booth has some game-changing insights.
You don't have to be a government to do it, though. You don't have to wait. It's an open network. Any single person can move their time and get a 45% IRR with a non-correlated asset that's risk-free from the existing system. Again, the only caveat I'd say is if it stays decentralized and secure. It's more decentralized, more secure 16 years after it started today, and every year it gets more decentralized and secure. This is a hard thing to understand because most people measure their world from the system of debasing currency. And so let's imagine a city, let's use the city of Vancouver. For their citizens, what they don't know is they're paying these taxes to the city, and the city parks them in the money that's losing money. And by the time they spend their taxes on services, those services cost more to be able to provide, and the city can't provide those services. And then the citizens wonder what's going on. And what's going on is you can't deliver the services because the money's being debased. And so the citizens are getting poorer and poorer and getting worse, madder and madder at the city. And there is no fix from a system that's debasing currency. But if you put some in Bitcoin, then that cannot be debased. So that you can, in other words, in the future, you can buy more services for your citizens. And as you start to understand this, and you start to understand this is not maybe true and it'll happen one day, it is happening. And it's been happening for 16 years. And you can see anybody who is in Bitcoin and stays in Bitcoin, they can purchase more.
Yeah.
Their money goes further, and that'll happen forever. It makes sense that more people would see that and move their time to the thing that can't be debased.
Well, let's talk a little bit about the volatility concerns that people talk about when they talk about sovereign funds. We see these price things 10, 20%. And, now that we have some history to look back in the chart, we know it's nothing to necessarily worry about at that day. Any legitimacy to those concerns on volatility when it comes to, hey, we're looking at these stock charts every day. I mean, sovereign funds aren't there to trade.
So if you're not there to trade, then you should be in this.
Right.
If you're in it to trade, if you're trying to, then you shouldn't be in this. If you're levering into something that's changing the world, a new structure for the world that can't be cheated, that is repricing everything, and you're trading that, then you could get wiped out.
Yeah.
And that's just an early evolution of an understanding of this, that fear and greed on both sides are trying to trade this asset. But when you really understand it, you're constantly a buyer. There's never a price that's too high. I buy in the low, I buy in the high, I constantly, because I don't think about the piece of paper that's being manipulated, pricing the world.
And that's a wrap on today's video with Jeff Booth's groundbreaking insights. He argues that the natural state of a free market is deflationary, a world where Bitcoin and AI work together to reprice everything, making goods and services cheaper while boosting productivity. But here's the big question. If Bitcoin remains decentralized, will it reshape the global economy forever? Will we finally escape the endless cycle of inflation? Drop your thoughts in the comments. Before you go, smash that like button, share this with someone who needs to hear Booth's perspective, and subscribe for more expert takes on crypto's future. Thanks for watching, and I'll see you in the next one.